With inflation levels sitting at 40-year highs, your cash is becoming less valuable every day. So it might seem strange that cash has been named as most likely to be the top performing asset class in 2022 ahead of stocks, bonds, cryptocurrency, NFTs, and property. That was in a recent global survey by Finder, where 34% of people in the US said they thought cash would be the best choice for their money in the year ahead. I thought this was really interesting because cash is a really flat asset. It typically underperforms all other assets, but I think they could actually be onto something. So in today's video, I'm going to look at whether it's possible for cash to beat all other assets and what kind of situation we would need to be in for that to happen. Okay, so first, I just wanted to explain what cash actually is when I'm talking about it. So it pays to separate cash, like physical cash in your hand, to cash assets as an investment class. Like if you kept cash under your bed, for instance, it's hardly a real investment as it won't return you anything. However, cash equivalents such as short-term treasury bills and interest-earning bank accounts can and do return a small profit back to investors. So when I'm talking about cash as an investment option, that's what I'm talking about. Cash products typically offer a low fixed interest return and are easily transferable back into cash. In this video, I'm going to use 3-month treasury bills as my main cash asset for performance. 3-month T-bills are often used as a cash equivalent. So historical data shows that 3-month T-bills are the worst performing asset over the last century compared to stocks, bonds, and property. To work this out, I grabbed some very helpful data from NYU Stern School of Business. As you can see, if you'd invested $100 in a 3-month T-bills in 1928, you would have just over $2,000 today. That compares to over $761,000 if you'd invested it into the stock market over the same period. Of course, if you were alive at the time to invest $100 into anything, well, you might not be dead, but you'd be really old. Despite this, cash has actually beaten the S&P 500 on 30 occasions over the last century. That's when looking at the performance of each in a single year. That's around 30% of the time since 1928. The reason for this, of course, primarily comes down to stock market volatility. Cash typically outperforms the stock market when there has been a stock market downturn or a correction. So far this year, the S&P 500 is down by around 10% at the time of recording, while the Nasdaq is down more than 15%. Bitcoin has also fallen 15% year to date, and Ethereum is down around 25%. Cash is currently outperforming stocks and major cryptocurrencies this year by merit of being flat. And even when you take inflation into account, well, it's still not doing that badly. So next up, I'm going to look at the very rare instances that cash has outperformed all assets, not just stocks, and what that might tell us about today. But first, if you're enjoying this video, please consider hitting the subscribe button. So while cash assets have beaten the stock market on numerous occasions over the past century, it's pretty rare that it will also beat bonds and real estate. Commodities are kind of a hard one to track because coffee is going to perform very differently to, say, oil. So to start off with, we'll start by excluding that. So just looking at the spreadsheet that I put together, between 1928 and 2021, cash has been the top performing among these assets on just 8 occasions. The last time this happened was in 1994, which coincided with the Federal Reserve raising the interest rate by 25 basis points for the first time since 1989. It's worth noting cash assets also performed particularly well during the stagflationary 1970s and 1980s period. In 1981, 3-month treasury bills rose as high as 14%, beating stocks, bonds, and even real estate. You might have noticed that a lot of people are drawing parallels between what we're seeing today and what was happening back then. Back then, between the 1970s and 80s, inflation was surging thanks to skyrocketing oil prices and a long period of low interest rates. That's much the same as today. Now, if we were to add commodities to the mix, which of course tend to do better when inflation is high, that's what inflation is, it's the cost of stuff, then the number of occasions cash has come out on top is even rarer. So in this case, I just decided to add oil and wheat performance being 2 commodities that are really crucial to the health of an economy. By the way, I got this data from macrotrends.net. Thank you, Macrotrends. When you add these two, cash has outperformed all other assets just twice since 1960. That was in 1966 and 1981. And those years were pretty unique for a number of reasons. So in 1966, there was a significant credit crunch where, following the post-war expansion, the Fed started to fear inflation after 2 years of economic growth and basically making it harder to borrow money by raising interest rates. It triggered the first significant financial crisis since World War II. In 1981, there was a similar scenario where the Fed raised interest rates aggressively to combat inflation. It triggered the worst recession since the Great Depression. Back to what's happening today, we have inflation sitting at 40-year highs. The Fed has only just announced that it will be raising interest rates despite the war in Ukraine, and we're still recovering from COVID-19. I don't think it's unreasonable to think that cash, even being relatively flat, could outperform all others by the end of the year, hinging of course on whether we can curb inflation, the price of wheat and the price of oil. Also hinging of course on whether stock and crypto prices rebound. With interest rates sitting at record low levels around the world, cash has been a bad place for investors to keep their money for some years. 3-month T-bills haven't been above 2% since before the GFC, after which the Fed started aggressively lowering interest rates to fight off the recession. And those rates have continued falling since then. And as at the start of 2022, they were sitting at 0.08% as the Fed attempts to motivate the economy, keep spending and growing amidst COVID-19. When interest rates are low, yields offered by cash products are also low, making stock and property investing comparatively more attractive. That's all set to change in 2022, with the Fed promising it would raise the official cash rate, and other cash asset rates have already started rising in preparation for these expected changes. The 3-month T-bill yield rose from 0.05 at the start of 2022 to 0.38 by March, and it's likely to continue going upwards if interest rates rise further than expected. Unfortunately, the Fed is now faced with a difficult balancing act, made all the harder thanks to the Russia-Ukraine crisis. The Fed knows it must raise the cash rate to combat high inflation, but also that doing so could send the US into a recession, an event that many analysts now believe is likely. That takes us back to the original question. Will cash be the best performing asset in 2022? Look, I think there are just too many moving parts to know for sure. If the Fed decides to raise interest rates by a significant margin over the course of the year, history tells us to expect stocks to fall, property to fall, and T-bills to rise. But if inflation becomes unmanageable and a recession sets in, the Fed might choose a different path. And if that happens, cash might remain a not so great place to keep your money, to put it lightly. As for what I'm doing in the next 12 months, even if I think that cash might be a great performing asset in the year ahead, you just can't know for sure. You don't know what impact the Federal Reserve lowering or raising interest rates is going to have on the stock market, on the bond market, and on other markets. So instead of worrying about the next 12 months or the next few months, I'm keeping diversified as I always have and playing the long game. So that means not selling out of all my stocks, not selling out of my gold, and not putting it all into cash right now because cash is still underperforming. That's it from me. Thanks so much for watching the video. I'd love to hear from you. What are you doing to prepare for the next 12 months? Are you doing anything new? Are you putting more money into cash, or are you keeping your assets as they are? Leave your thoughts in the comments section below and I'll respond. Thanks so much, guys.